The information is out with the second edition of our weekly finance newsletter, and this one includes a clear warning for crypto investors. Joining me now is Ken Brown, finance editor here at The Information.
Hi, Anita.
Hi, Ken. Good to have you on the show.
Yep.
So the first line of your piece says, winter is coming, not just in the seasons, but in the crypto market. Can you explain what you mean?
So crypto winter is a phrase that people have used a bunch of times, particularly after the FTX collapse. Things were, prices were down. It was really ugly out there. So they called it the crypto winter. Right now, we're in another bad sell-off. Crypto's, down a bunch. The most speculative stuff is down a lot. And so, the idea of if it gets worse, it's going to be another crypto winter. So I was playing off the fact that it's winter. It's almost winter. And where I live, it feels like winter. And so that was why. That's the first line.
Well, it's chilly here in San Francisco too, Ken, but I want to ask you, what is the center of this current crypto meltdown? What's really driving it?
So, there was a boom and prices went up a lot, and now they're coming off. I think what's happened in the market is it just got very, very speculative. There were a ton of crypto assets put on the stock market through these treasury stocks. The most famous is Strategy, the company called Strategy. And so they loaded up on crypto. They were on the stock market, and these things just went through the roof and kept buying up more crypto. And that is now over, and those prices have come down a lot. And that was, by the structure of these things, that was driving crypto higher. And by the structure of these things, as they go down, they drive crypto lower. So that's what's happening now. So there's this big sell-off.
So another thing that you mentioned about the crypto market in your piece was that stablecoins have gained a lot of popularity over the last year. In July, we saw the Trump administration sign the Genius Act into law, which that really created the first regulatory framework for stablecoins. And you argue that they're very risky. I wanted you to say a little bit more about that and what the risks are.
Right. So the difference between stablecoins, so let's define. Stablecoin is something, it's always worth $1. It's 1-to-1 against the dollar, and other crypto goes bananas, right? It goes up and down like a stock, really, or more. And so stablecoins, they promise you they're going to give you your money back. That's the promise of a stablecoin, just like it's the promise of a bank deposit or a money market fund. And that's hard to do. And we've seen runs on banks and on money market funds and on anything that promises stability over decades and decades. And so they're making a big promise. And the question is, can they keep it? And so the history is no. Stablecoins have broken that dollar peg a bunch of times in the past. One just happened very recently in this sell-off. It was a bit of an oddball stablecoin, but it broke the buck. And so
what was the stablecoin that recently sold off?
It's sort of a no-name stablecoin in Asia that they call it algorithmic. So it's not one that's certified in the U.S. or matches the U.S. law. But it went, it fell 90-something%, and that's the end of that. Money was missing. They lost money on their investments, and then everyone freaked out. What happens? So the difference is when you're an investor and you own a stock and it goes down 10 or 20%. Okay, you might be unhappy, but that's what happens to stocks. When you're put your money in a bank or in a money market fund and it falls 5%, it's not supposed to fall. You freak out. You want your money back immediately, and you and everybody else causes a run on the bank. And so the risk is with stablecoins, there is a run. And the problem is stablecoins have gotten so much bigger, and they're starting to be used more for holding cash in countries where there's unstable currencies like Nigeria or Argentina. People are buying stable coins. And the risk is that something goes wrong and there's a run and people want their money back. And then there's a liquidation and it's destabilizing to the system. So that was the main thing I was getting at.
So like you mentioned, Ken, this isn't the first time that we've seen a stablecoin blow up. And you talked a little bit about this in your piece. Can you share a little bit with our viewers about what we saw when Silicon Valley Bank failed a couple of years ago and how that episode actually related to stablecoins?
Right. So Circle is one of the biggest. It is the biggest stablecoin in the U.S. It's the second biggest in the world. They had $3 billion sitting at Silicon Valley Bank. Silicon Valley Bank collapsed. Basically, the value of Silicon Valley's treasuries that it was holding fell when interest rates went up. So safe treasuries, but they lost value. It fell. The bank got in trouble. And basically, these deposits were not insured. And so theoretically, Circle could have lost a bunch of money. They announced it. Everyone started to sell their Circle, and the stablecoin fell to like 88 cents on the dollar. And so general freak out. And the US government came in and saved the day and guaranteed all this stuff. So the problem is like, that's not going to happen every time. And, it creates this sort of systemic risk because people start selling one thing and then they start selling something else to get the money to sell something else. And it is this what they call contagion, but it's this domino effect of things starting to, the market starting to tank one after another. And that's what we've seen in the past.
Zooming out here, Ken, can you tell us a
Yep.
little bit more about what you're watching for next in crypto more broadly and just sort of how the sector's impacts could ripple through the economy on a larger scale?
Well, crypto is more intertwined with the traditional financial system than ever before. And these stocks, crypto stocks that I talked about before, are part of that. And so we're going to see this is really what I call what I was saying is this is it'll be a new kind of winter because it's so interlinked, so much more interlinked. There's a ton of crypto on the stock market. There's these stable coins. There's other products, and everyone's issuing these stable coins. I mean, yesterday, Klarna, which is the buy now, pay later company, says it's going to issue its own stable coin. So what I'm really looking at is how this sell-off, whether it ends now or keeps getting worse, interacts with the global financial system, the traditional financial system. I mean, the regulators of this system are very worried about this and looking really carefully. And so this is a test, right? And so, what I really wanted to tell people is like, this is a test, pay attention. This is going to tell us how crypto and the traditional financial system are going to react this time.
Got it. Well, history certainly repeats itself, and we'll all be watching closely and paying attention to that. And I'm sure we'll have you on the show again to talk about it. Thanks so much for being here, Ken.
Thanks, Anita.